At this point, I'd like to introduce our presenter. His name is John Donner. John is an attorney with the law firm of Roach, Lennon Brown. And John is also a former managing attorney of the Western New York Small Business Legal Clinic and a past volunteer for SCORE Buffalo Niagara, as well as a regular workshop presenter for SCORE. John earned his law degree at the University of Buffalo, and John also has degrees in engineering and business. He's one busy guy. John, I want to thank you in advance for taking time out of your busy schedule to go ahead and speak with us tonight. At this point, the microphone and the controls are yours. Please go ahead.
Okay, thanks, Ted. Good evening, everybody. Like Ted said, my name's John Donner. And before I became an attorney, I spent time in the aerospace and defense industry and in program management, operations management. So a lot of times I was involved in trying to subcontract and looking at small business opportunities to give to small businesses and the issues that I had trying to find that. And that was part of why I joined SCORE, so I could get in with the small businesses. I got to shut this other computer off quick. I'm getting an echo here. Sorry about that. Okay, so I've looked at it from both sides, and then as I got involved on the law side of it and contracts, and then most recently the last 5 years or so working with entrepreneurs and small businesses, now looking at how can we hook organizations together. So what I'm going to talk about tonight are a variety of topics. I'm going to talk about small business awards in terms of what the federal and the state governments are issuing dollar-wise, how contracts are awarded. We'll talk about the categories of small business concerns or small business enterprises. You'll see the terms SBC and SBE seem to be used. They intermingle the terms. It depends on whether you're looking at the locally or state or federal level, but it's the same thing. We'll talk about, even though the seminar really is geared towards organizations that are already certified, we'll talk about qualifying as a certified small business. We'll talk about contract types, contract cost, proposal preparation, finding opportunities, and also assistance to small businesses with respect to procurement. Then I'll go in, and a lot of times I find, small businesses that are just starting out, they don't necessarily know exactly how to price things out. So I go through a very brief pricing exercise, and then I have a sample RFP that I'm going to show you so you can see what a federal RFP looks like and the things you have to look for when you're putting a responsive proposal together. So I'm going to start through, and first, of course, I got to put the old disclaimer in there as an attorney that obviously this is all generalizations and specific things. We'd have to look at the unique requirements of your business. All right, so these are the topics that I've already talked about, what we're going to cover. So we start out and we'll look at small business awards. So in fiscal year 2022, which is the fiscal year that would have run from October 1st, 2021 to September 30th, 2022, the federal government awarded $154.2 billion to certified small businesses. That reflects an increase of about $8 billion from fiscal year 2021. And it represents over 27% of the total federal contracting dollars for that period. Additionally, if like when I worked in aerospace and defense and in the environmental services industries, I spent about 35 years working for prime government contractors. And when they get a prime government award, whether it's at the state or federal level, there are subcontracting goals in there that you have to meet those goals. And so on top of the $154 billion, there was another $72 billion that fell under federal contracts that were issued to prime contractors. So there's a lot of money flowing out there to certified small businesses. And then in addition, last year, New York State awarded over $5 billion to certified small businesses. Okay, so how do they come about with these? What kind of awards? Well, a lot of what you'll see, and in the case where we talked about the billions that were set aside for the federal government, the local, state, and federal governments, they set aside business set aside contracts. So they're set aside for certified small businesses. And when we look at the RFP later tonight, you'll see that it's categorized as a set aside contract. And then we talked about the prime contractors where they have the subcontracting goals, and that falls under the Federal Acquisition Regulation Section 52-219-8, which is utilization of small business concerns. All right, so when we talk about prime contractors, and I use this slide because I've done some work with the SBDC of Buff State, and right now I think they're in their third week of its 6 or 8 week program that they do with Turner Construction, small business certifications in the construction business. And so you see here in this diagram where, a state government issues a contract, it goes through, in this case, Turner would be the prime contractor, and they're going to attempt to issue, upwards of 30% to certified. In New York State, we look at MWBE, so minority and or women-owned business enterprises. Okay, so small business concerns or small business enterprises, again, they kind of interchange those terms. So in New York State, the primary one is an MWBE, which is minority women-owned small business. Federal government, you've got the 8A and the hub zone, they're kind of startup businesses and in underutilized business zones, so like poor sections of the cities and things like that. Then you have through the VA, you've got veteran-owned small businesses, service disabled veteran-owned small businesses, women-owned small businesses, economically disadvantaged women-owned small businesses. Sometimes you'll see in procurements there's minority small businesses, Native American small businesses. There are other classifications. These are the primary ones. And so how do we qualify as a certified small business? So let's, in this case, we're going to say it's a women-owned small business. So it's going to be independently owned and operated. It's not going to be dominant in its field of operation. And so what they're saying there is it's a brand new field. It could be a small organization, but they've got the market cornered nationally or statewide or something like that. So then they wouldn't be qualified as a certified small business. And then you look at, it has to be majority owned by one or more of that designated small business concern group. So in this case, if it's a women-owned small business, at least 51% women-owned, and that can be the composite ownership of female population in the organization. As long as they're 51% or more, then that counts. Same thing, it's not just ownership, but management and daily business operations. They look at that as well. And then the other thing is if the contract is awarded to the certified small business, they have to perform the majority of the work. So it's not like you can create this certified small business shell, you get a big award and you just subcontract the whole thing. You actually have to be deeply involved with the content of the work as well. And it doesn't exceed the relevant small business size standard for particular procurement actions. Typically, it's going to be anywhere from 100 to 500 employees. I've seen some classifications where it's as much as 1,500. I know locally with the joint task force with the city of Buffalo and Erie County, they have it set at 300. So, you can have a sizable organization and still be a certified small business. Okay, then we talk about the relevant size standard. And so at the federal level, they use the North American Industrial Classification System. And what that is, that they take the economy and they break it into about 20 different sections, and they assign, they have various subsets in there, and they assign a 6-digit code. And what's unique with this is they developed this in the late 90s, the NAICS. Before that, they had SIC codes or specific industry codes. And I think those might have been 5 digits at the time, but there were all these different standards in use. So with the NAICS code, that same 6-digit code flows across the United States, Canada, and Mexico. So it's kind of, that's North American, obviously. And the size standards, it's split. In some cases, it talks about number of employees. In other cases, it talks about the annual receipts, the revenues for the business. There's a limitation there. And then one of the things that I want to mention at the federal level, when you're a certified small business, you can be certified for multiple NAICS codes. When I worked for a global environmental firm, we had professionals in 85 different disciplines, and we could do just about anything environmental. We had done about 45,000 projects across the 123 countries. And so with all those disciplines, there are different types of work that we could do. And we were registered under, I think it was 6 different NAICS codes. And that becomes critical because when an RFP comes out, you have to be registered with that NAICS code to be able to bid on the award. All right, so then this just kind of gives a little bit of a history on the NAICS code. And again, you see in the center of the screen there, it says it replaces, it talks about the standards for the US, Mexico, and Canada that it replaces. And this is updated every 6 years. And it's kind of based on the census and the information they gather from that. So it's hard to say if 2023 they'll issue a new one or not. Obviously, with COVID, a lot of things slowed down, so there might be a delay in that. But we can always look at what the current standards are. And then when I talk about New York State, that last black bullet talks about New York State. They have a different set of codes issued by the New York State Department of Taxation and Finance called Publication 910. And it's really a subset of the NAICS codes. And those last 2 bullet points have the web addresses if you want to look at the NAICS codes or if you want to pull up Publication 910. Okay, so I just pulled out about 8 different categories. And when I put these slides together, you can see that in some cases it's based on the annual revenue, others is based on the number of employees. And you can see that for even something like janitorial services, if your business does under $18 million a year, that you can still be certified as a small business. So you can be rather large and still be a certified small business. So now we talk about contracts. Typically there's going to be 2 basic contract structures, fixed price and cost reimbursable. And the big difference there is who assumes the risk. The fixed price, that has the biggest risk, the biggest reward, because you've determined what the price is going to be. And regardless of changes in interest rates, cost of materials, labor rates, anything else, once you're locked in at that price, that's the price regardless of what your costs are going to be. Cost reimbursable is more where maybe it's a developmental contract, or it could be specifications where instead of, usually in a manufacturing contract, if it's a production program, it's going to be fixed price. You could have a cost reimbursable contract if, in fact, it's some services where it's an unknown quantity. So what may happen is you may have fixed labor rates in a contract, but you don't know what the number of hours is going to be. So you have that kind of flexibility. And then when we talk about flexibly priced, if it's cost reimbursable, the contractor can legally stop work when all the contract funds are spent, even if the work isn't done. So that could be, you have a contract where it has 3 full-time employees that are doing work in the field, and it's based on, 40-hour work weeks. And the contract's for 1 year, 3 employees at 40 hours. They may accelerate it where they want you to work additional hours, or the work may not be done at the end of the year, but you fulfilled your contractual requirements. So for additional work to be done, then you're going to have a contract amendment, which adds an additional scope of work and additional value to the contract. So you get reimbursed for that. You can also have flexibly priced contracts that are fixed price in nature. And that'll be a case where there's a fixed price, and then maybe there's an incentive in the profit component of it that maybe a performance exceeds contract requirements, that the profit is at a little, they give it a little bit higher percentage, or the opposite, that if you don't make performance, that it cuts into the profit. So, but in that case, the base component is fixed price. So you still have to deliver on the contract. And if you have to run over to do that, that's out of your pocket. All right, so we talk about, identifying specific contracts. So you have fixed price, you have cost reimbursable, which usually is just cost with no profits on it, or cost plus a fixed fee, time and material, labor hour, and an indefinite delivery, indefinite quantity contract. So I have just in here, we talk about the basics of it. So you say firm fixed price contract, that the price is the price. And so regardless of the reason that costs go up, you still have to perform the contract at the established price. Back in the 70s, there was a lot of cost overruns, especially in the aerospace and defense industry, where a lot of production contracts were cost reimbursable contracts. So all the overruns were covered by the contract, by the government, no risk on the contractor. A lot of investigations, and then they kind of went the other way, where all the contracts were fixed price, even in some cases where they were kind of developmental in nature, where they kind of overcorrected. And so, I was involved in a program with an aerospace concern that I worked with. It was for electronic warfare systems. And the contract was originally going to be for about $100 million. There were all kinds of additional requirements in terms of work measurement, reporting that because of the value of the contract. Then they cut it back. It ended up being about a $30 million contract. There was more development in it than what was originally intended. And it was we ended up, the value of the contract was about $40 million with add-ons and things like that. And we spent about $75 million to end up delivering everything. So, I mean, it can be an absolute disaster if circumstances change. Then we talk about cost plus fixed fee. So then your costs are you're reimbursed for all your cost. And then on top of that, there's going to be like a fixed dollar value of profit that's put into that. Time and material, that's where usually the time is set up at a fixed hourly rate, and then you're reimbursed for material plus typically some kind of material handling cost on top of that. So think about if you go to your local auto mechanic and you have work done on your car, a lot of times you'll see on the wall, they have posted on the rates, it's maybe $65 an hour for cars and light duty trucks, and maybe it's $80 an hour for heavy, commercial trucks, that kind of thing. And so they're going to look at, what are the hours based on the book rates. They're going to do that, multiply it by that rate. And then with the materials, they're going to charge you usually the equivalent of the list value on the part, and they probably get a discount from their suppliers. So that's that kind of material handling component. Versus a labor hour, which is kind of like a time and material contract that doesn't have any material involved. And then when we talk about requirements contracts, these have delivery schedules and quantities that are flexible during the contract period. So an example of a contract like that would be, let's say, a regional contract with the Environmental Protection Agency. They may issue to the prime contractor an 8-year contract that's got $100 million value on it. And under it, it's got, say, a dozen or 14 task orders for different types of environmental work. And they'll, I won't say randomly, but they project what they think the expenditures are going to be under each one of those task orders. And for small businesses, they may be a certified subcontractor under one of these task orders. So what that means is they're pre-qualified, and in the contract, it's going to have what your hourly rates for reimbursement are going to be, that kind of thing. Well, as environmental projects move forward, sometimes they get more involved, or they're not as involved as you originally anticipate. So a lot of times, some of these task orders may not reach what the projection were, or it could be considerably more. You know, I've seen situations about in the early 2000s when like Rita and Katrina, the hurricanes came through, they're down in the New Orleans area. It was an environmental disaster. And so they had to get boots on the ground immediately. And so they added millions of dollars to the applicable task orders of that regional contract. I know that the environmental firm that I worked for at the time, they got another $3 or $4 million worth of business because of that, but then it probably came out of one of the other task orders. So when you look at what the target is on an IDIQ, that may or may not come to fruition. So it's just something you have to be consider. Then I just have some other contracts that aren't necessarily used as often, but you know, it just gives an idea of the differences and what's included and how profits handled, that kind of thing. All right, when we talk about federal contracts, there are common guidelines that are across the board. So when we look at uniform policies and procedures for the federal acquisition process, they have the federal acquisition regulations. And so they apply to all these federal contracts. And depending on the type and the size, some provisions apply, others don't. The other one that we look at are the cost accounting standards, which deal specifically with accounting practices. And so it's not just what your practices is, are they consistent, and do you comply with the specific standards type of thing. So it's a set of standards and rules. For small businesses, it usually doesn't apply. When you get to a certain size, then they talk about modified CAS. I think there's 13 or 14 different cost accounting standards. Under modified CAS, you have to follow the 4 basic ones. Under full CAS, you have to follow all of them. And to be full CAS, I think you have to be, it used to be like $15 million in annual government contracts or more type of thing. So again, for most small businesses, you probably don't have to worry about it. All right, so we talk about allowable contract cost. And so that is the direct and indirect costs that can be allocable to the contract. And so obviously the first thing we look at is direct cost. And when we talk about direct cost, that could be if you're building something, the material cost. It can be the direct labor hours that people are doing when they're actually building the product. So it's clearly identifiable. You can tie it into that contract. Then we talk about indirect cost. And so that could be things like, you know, marketing, administrative costs, human resources, the accounting department, the utility bills, things like that, that cover more than not just contracts, but other functions of the organization. And so you come up with logical groupings and pools and bases for how you allocate to the direct cost, how you do the proper allocation for that. And then we talk about allowability. So, things they look at, is the cost reasonable? Is it allocable? Is it consistent with cost accounting standards? Does it meet the terms of the contract? And are there limitations specified in the cost principles? Because if you're doing purely in the commercial market, you can lump everything in there. But when you get into federal and any kind of government contracting, there are going to be some costs that just aren't allowed. They're non-reimbursable costs. So when we talk about reasonableness, okay, so is it reasonable in its nature and its amount? Is it recognized as an ordinary and necessary expense for performing the contract? Does it reflect sound business practices, requirements of the law, that kind of thing? Would a prudent person take similar action? And do these costs represent any kind of significant deviation from established contractor practices? All right, so reasonableness. And then, is something allocable? And so that means, is the cost assignable or chargeable to one or more cost objectives? So, it can be allocable. Obviously, if it's a direct cost, it's incurred specifically for the contract. So there you look at direct labor, direct material, maybe a specialized piece of equipment, things like that. Then you look at benefits, both the contract and other work, or both government work and other work. We have, you can have in aerospace and defense where you can be working on a government contract, and then you can also be doing spares and repairs in the commercial marketplace that have the same part numbers and everything else, so that the units are similar. And so the equipment you use, the people you use, the materials, it's all similar. And so, sometimes, how do you define? I mean, obviously you can define the government contract from a commercial contract by just the work orders that you assign and people are charging on their timesheets. And that's how you kind of look at it that way. And then finally, is it necessary to the overall operation of the business? So that's when we talk about things like employee benefits, indirect departments like human resources, accounting, marketing, things like that, that you're not charging directly to a contract, but it's a overall function of the business. And so now it's a matter of, we have to come up with a feasible allocation, how you assign a percentage of those costs to your different contracts, your different projects. All right, then the other thing we have to look at is sometimes, if you're a manufacturer, you might just be building on site and shipping something. But if you're doing work in the field, or if you're doing installations in the field, or there's meetings in the field, there's going to be travel involved. And so that's where you look at the federal travel regulations, or if there's international work involved, they call the joint travel regulations, the JTA. And that really sets up the plans. And it started out, these were the outlines for government employees in terms of what they were going to be reimbursed. And so now what we've done is we've gone and we've extended that to all the contracts. State and federal have some kind of limitations on that. So when you look at ordinarily with travel, a contractor is not going to be reimbursed for any travel under 50 miles. And if it's under 50 miles, they wouldn't be reimbursed any lodging costs or anything like that. If you're flying, it's coach. It doesn't allow the additional cost of business class or first class. And then when you look at the per diem, it's broken up into a combination of lodging, a per diem allotment for breakfast, lunch, and dinner. And then usually it's about $2 a day for incidental expenses, that kind of thing. And that's set up based on typically zip codes, geographical areas, the per diem rates will be different in different areas of the state or different areas of the country. All right. Another thing that we have to look at is that they're going to make sure that when people are working, that they're getting treated fairly in terms of the payment and benefit compared to other workers working in the same geographic area. So the reason that you would do this is, let's say, up here, we have a big contract come through, and let's say there's a firm in Alabama or Mississippi comes in and they bid it, and their workers are getting paid 30% less. So they can come in and they could undercut it and get the award. And it could be like buying gas on the reservation, where they're making money hand over fist and they're still charging less than what the rate is. So what they do is they have standards set up, and then where the geographic areas where the work is going to be performed, they issue wage determinations by labor category, and you have to be paying at least the wage stated in these wage determinations. So the typical ones I have highlighted here are the Davis-Bacon Act and the Service Contract Act. And for most federal contracts, it's the Service Contract Act, just because of the nature of it. Davis-Bacon is limited to public works projects for laborers and mechanics, where Service Contract Act, when I was environmental services, obviously service employees and for all federal governments. And you can see it kicks in any prime contract exceeding $2,500. So it's almost always going to be there. And then the others are various variations for specific types of contracts and specific types of labor, that kind of thing. But it's something that you have to consider, that you have to make sure that it's there. And you'll see when we look at this sample RFP, the Service Contract Act applies to that, and they actually have the wage determinations as part of the RFP package. All right, so now we got to talk about cost recovery. When I'm talking about cost recovery, and how soon are you getting paid? And then contract financing, from a standpoint of how much out-of-pocket costs for how long type of thing. So obviously, one of the issues becomes, you do this work, when do I get paid? If you own a retail store or a supermarket, or even you own a mechanic, an auto repair shop. Typically, obviously with the restaurant or the store, it's a point of sale. So the person walks up to the counter with whatever they're buying, and they pay for it right at that point, and then they walk out with the product. Typically, you're going to do that the same thing if you're at your local auto mechanic. You go to pick up your car, you pay the bill, you drive off, type of thing. Well, when you're doing work with the government, you got projects that can take a considerable amount of time. You look at, if you're in a construction, even if you're in residential construction, typically if you sign a contract and a homeowner, somebody's going to have you build them a house, there's going to be milestone payments, because you don't want to wait until the house is ready to be occupied and then you get paid at once. So it could be one of those things where a certain percentage you get when they sign the contract. Maybe when they pour the foundation, you get another percentage. When the shell goes up, when the electric goes in, the plumbing goes in, that kind of thing. And then there might be the withholding, the last 10 or 15%, until you get the certificate of occupancy and you're ready to close. If you look at, for example, the last aircraft carrier that was built, it was like an 8 or 10 year program, and it was $13 billion. I don't care how big the organization is, you can't float that amount of money until delivery takes place. So what the government uses, and they say any contractor grouping of contracts that exceeds $1 million, or for small business concerns, $100,000, there's going to be progress payments. So how that works, depending on the size of the business, is you're billing the government on a monthly basis, and you can be reimbursed typically anywhere between 80 and 90% of your cost on a monthly basis. And then when the delivery takes place, you get that final percentage at that point in time. So that kind of keeps everybody afloat. The other thing that they do is they've got the Prompt Payment Act, so that when the government pays the prime contractor, they have to pay you within 30 days. So the government is going to pay the prime contractor within 30 days. And then the prime has to pay you within 30 days of them getting paid. But the problem you have to look at, even with the Prompt Payment Act, is you could be a second or third or fourth tier subcontractor. So that payment could be 4, 5, 6 months down the road, even if everybody pays on that 30-day cycle. So that's something you have to look at. If you're doing a lot of government contracts, especially initially, you may have to have a revolving line of credit or something to keep things rolling until the cash starts coming back in. And then, of course, the issue would be if there's deliveries over a 12-month period, if there's a 4-month lapse at the start, you're still going to be getting paid for another 4 months after you conduct that final delivery. But you have to consider that in terms of your cash flows when you're looking at proposing these and looking at, the costs that you're going to incur and the timing before you actually get reimbursed for your cost. All right, so let's talk about proposal preparation. So we want to sit down, we want to identify the needs in the RFP or RFQ, and that's request for proposal or request for quotation. And a lot of times the RFQ, it's probably because the scope of work is specifically designed, you know exactly what's there, whereas a request for proposal, maybe there's a technical specification and it's up to the contractor on what the design is going to be and things like that. So they have a lot more input. There's a lot more variation in how they'll execute the contract. You need to note key events and dates. Obviously, determine the scope of services. There's going to be a lot of attachments. There might be some personal guarantees or representations and warranties. You have to address that. Some of those have to be executed attachments as part of the package. The price quote, again, is it just one number? Is it broken out by line items? Is there a breakout with recurring and non-recurring? Is there a development program and then a production program? You have to look at how it's pieced out and you have to price it accordingly. And then finally, you want to go through multiple review iterations to make sure that you've, crossed the T's and dotted the I's. So things that you should have, because sometimes these RFPs come out and the turnaround time is pretty quick. It can be the matter of a couple of weeks and you have to have the proposal submitted. And it can be pretty comprehensive. So what you want to make sure is that you have as much work done ahead of time, because these are generic efforts that would apply across the board to your proposals. So obviously, if you're proposing, you need to have your formal business structure. A lot of times they're going to ask for previous work experience, projects completed that are on point with what that RFP or RFQ is for. Same thing, resumes for owners and principal officers. They may want customer referrals. There might be different pricing models, so you should have some templates in place so you can recompile the way you calculate cost and have that all set to go. So now you can start pumping numbers in, looking at that. Have any certifications that you need. And that's not just, are you a certified small business, but, do you have to have a permit? Are you licensed to do business in that state, that kind of thing? Do you need any specific, professional licenses, or let's say you're doing asbestos abatement or something like that. Are there special permits and licenses that are required? Do you have those in place, or do you have the applications all set to go, that kind of thing? And then, of course, from a federal level, you would be registered in SAM, the system of for award management. And so you would determine you'd already have assigned what codes you can bid on, because if you're not listed in SAM under that NAICS code, they're not going to accept the proposal from you. All right, so other preparations. So do you have the ability to recompile cost data to support a variety of cost proposal approaches? And so let me give you an example. Let's say there's a contract for engineering work. And the way you do a lot of engineering work, and maybe you categorize engineers as junior, senior, chief, and principal. So it could be like an engineer 1, engineer 2, engineer 3, engineer 4. They're all going to be different hourly rates. They're going to be based on a certain number of years experience, a certain level of education, where each one progressively goes up as you get into the higher levels. So you may have your standard is you've got these 4 categories. Now the RFP comes out and the engineering services you provide, they want it priced in 3 categories. So now you have to be able to, how do you cross map to figure out which ones either go up in the scale, stay the same, go down in the scale. And so you have to look at, is there a way you can recompile it? Do you have updated resumes for all the key personnel? When I worked for the environmental contractor, they had at their peak 1,100 employees in 85 different scientific disciplines. And they had anybody that would be doing work. So, 1,000 or more of those employees, they had annual updates to each and every one of their resumes. So then when the proposal came through, you looked at who was going to work on it. You automatically had all the resumes ready to slide right in there. Do you have a simple summation of your body of work at the project or contract level? Like I said, this firm had done about 45,000 projects, and they had like a 1-paragraph summary on every single project. It had who the client was, what the work was, the period of performance, the contract value, a very simple update. But you had now all these summaries. And then when they were looking for experience that was on point, you could quick compile the ones that related to that particular program and you could drop them right in. The other thing is, do you collect cost and do you estimate consistent with other people in your industry? Because obviously, if they get multiple responses to a solicitation, they're going to be comparing the proposals to each other. And if you have one that's so far out of sorts, they can't compare it to anything, that might be enough on its own that they can determine, give an accurate comparison and say, well, then it probably is not the best value. So they're just going to discount it type of thing.
Say, John.
Yep.
Say, John, there is a question that is in the chat. How do you want to handle the questions? Do you want do you want to look at it now or wait until the end?
You know what? The way I've got my screen set up, I can't see the chat.
Okay, well, let me go ahead and read the question if you want me to do
That's
that.
fine.
Okay. Matthew is asking, what do you do if you are bidding and do not have previous work or projects completed for the RFP?
Okay. We'll see. Well, then you would state that. And you'll see it requests that when we go through the RFP here at the end of the night. I've got some highlights in there and I'll talk about those specific things. Because obviously there are some times that you don't have on-point experience, but that doesn't mean that you don't have the existing capabilities to do the project. So then it's just kind of a clarification and you just take it forward from there.
Thanks, John.
Yep. And then we look at, what is the current capability summation? When I worked in the aerospace and defense industry, we had about a 25-foot by 25-page PowerPoint presentation on the capabilities of the division. And so it would talk about, the annual sales by product line, the customers, the programs, things like that. So it's kind of like that simple summation of your body of work that maybe on an annual basis, this is what we do, the volume of work, the clients we've had, that kind of thing, there are capabilities, that kind of thing. And then do you have readily available templates to utilize in proposal development? So you should have, maybe 3 or 4 different models of generic proposals that when you get the RFP, now you can just start dropping that information in so you can compile a responsive proposal at a pretty rapid rate. Okay, the accounting system, you got to look at that as well. And I mean, it might be QuickBooks, that's fine, depending on the size of the organization, but you have to look at these things. So do you have the ability to segregate direct and indirect cost? And that can be something as simple as, when people are charging their time or you're allocating cost, that you have either accounts set up that's what, if you have an accountant or, a bookkeeper or a marketing person or an indirect person, that they have an account that's charged versus the direct people are charging specific work orders. So that they're not just charging all the one account and then you're trying to separate it all. And then, do you identify and accumulate direct costs by contract? And again, you can have people that are in the same department and everything else. And if you have some kind of work order cost code, the base work order is usually going to be associated with the contract itself. And the cost code may be tied in with specific line items for the contract. And then there's further division. A lot of times, if you're larger and you've got a more robust accounting system or a timekeeping system, that, charges can be segregated by like department number and things like that. So it gives you ways of, splitting out cost and recompiling them, things like that. Do you accumulate costs under the general ledger, under general ledger control? Because obviously now you're also going to be looking at things like utilities and rent and insurance and things like that, maybe even fringe benefits and that it's going to be general pools, and the allocation is going to be usually over a G&A, a general and administrative rate, or an overhead rate or something like that you apply to direct cost. Timekeeping system, identify employee labor by cost objectives. So that's where I talk about, within a contract, you have different contract line items. That could be a case that contract line item 1 is -10 on the work order. Line item 2 is -2 on the work order, or -20 on the work order, or something like that. So you can segregate the cost by, when I talk about cost objective, it could be, contract line item. It could be separating manufacturing from engineering. And again, depending on a work order cost code, department numbers, things like that, you just have to look at, do we have enough of that information so it gives us the ability to recompile when we need to? Does the labor distribution system allow charging direct and indirect charges to proper cost objectives? And again, that doesn't necessarily have to be a sophisticated accounting system from a software standpoint. A lot of times you can do that just by having the work orders that employees charge. When they're working direct, there's for direct projects, there's specific work orders and work order cost codes. For indirect people, they may just have a general ledger account that they charge their time to, that kind of thing. So, I mean, it's something that you have to look at, how much do we, how granular do we have to make our cost, that then down the road, it allows us to recompile them so that, a lot of times, if this thing gets audited down the road, do you have the clarity where you can demonstrate what are recurring and non-recurring, allowable, unallowable costs, direct cost, indirect costs, that kind of thing. The recurring from non-recurring, again, that could be a number of things. That could be based on the function, that could be based on a work order cost code. In some cases, maybe they have you do a development program and then you get to a certain point and they say, okay, now it turns to production. And it could be a matter of there's a time that takes place. And when you hit that date, now it shifts to production. Ordinarily, what you're going to do is if you think there's going to be a pre-production mode, that you have separate work order cost codes for that. And then when it shifts to production, you have a new set of work order cost codes. You can always combine that stuff later on if you want to look at the overall project cost, but it's hard if you don't have it split in enough detail up front. It's always a lot easier to combine than take a combined number and try to extrapolate elements of it down the road. How do you easily calculate unloaded, loaded rates by employee, department, function, product line? And again, if you're collecting costs via timesheets or electronic timekeeping system, usually, every individual is going to have, even if there's a generic labor rate, everybody's going to have, based on their own salary or hourly pay, what their rate's going to be. So you have that direct number and then the overheads get applied afterwards. So, usually when you look at cost buildups, contractors have the ability to look at their direct cost. And then after they've compiled all their direct costs, that's when they take their G&A and their overhead and they apply it at the summary level. And then, similar to all these other points of discussion, do you have the capability to recompile data in logical and consistent manner to support proposal activity? And like I said, in the case of, you typically build on your production programs 4 levels of engineering. This RFP comes in, there's only 3 levels of engineering. So you have to kind of recompile who fits where. And you could have the same thing where some contracts, maybe you look at what department, or you have product lines or departments set up that what departments will bid. And now all of a sudden you have something that's going to be more global. So do you have to mix and match departments, things like that? So it's always makes more sense to try and be more granular up front, because that gives you more options in terms of being able to recompile down the road. All right, reviewing an RFP. Do you understand the requirements and is your proposal responsive to the requirements? If they want a price on each contract line item, does your proposal have a price on each contract line item? Do they want to see rate sheets? They want to know what your indirect rates are, or do they just want total cost by line item? You're going to see there are going to be sometimes they'll say, pre-award, they'll have pre-award meetings, post-award meetings, other opportunities you can take advantage of, because a lot of times there may be several questions. So it may be the RFP may say, send questions, and it may have an email or a phone number or an address that you mail to. Nowadays, most of them have an email address, the person you can contact for clarification. And then a lot of times too, what they'll do is maybe, depending on the lead time for the proposal, they may have a pre-award conference. At that point in time, any questions they've received by email, any questions they got in the conference, all the people that are all the parties proposing will then they've got an email list, and so then the contracting agency will send out a composite of all the questions that all the bidders asked and what all the responses were. And so then that gives you that standpoint. The other thing too, and nowadays with Zoom and Slack and Microsoft Teams, a lot of these things can be online. So you're not traveling to Washington or traveling somewhere else to meet with the contracting agency, that they can do this stuff online, just like we're doing this webinar, that you want to take advantage of those things, because you can learn not just from the awards that you win, but also the awards that they lost. Why why was this firm picked, or, what was wrong with my proposals, things like that, so that each one of these can be a learning experience. And then finally, the deadlines. Deadline's a deadline. The environmental firm that I worked for, it was before my time. I think it was probably in the late 80s when, they wanted, you might have a proposal that's several thousand pages, and they wanted you to submit 7 or 8 copies type of thing. And they wanted it at EPA headquarters in Washington. And so what they would do is they would actually have a person in the company would fly the proposal down there. They'd get their own airplane seat for the box with the proposals in it. They would get down there a day ahead of time. Then they would take them over to EPA headquarters to make sure everything takes place. They had a proposal go in. It was for one of the regional EPA Superfund contracts, a 7 or 8 year program, probably worth in the vicinity at the time, $75 million, something like that. Got down there the night before, left in the morning. It was due at noon. They got stuck in construction traffic. They got the EPA headquarters, and they were the leading candidate. They were the incumbent, and the EPA really liked their work. The rates were competitive, everything else. So, it was ours to lose. They got there with the proposal about 12:15. They couldn't take it. They awarded it to somebody else. So that kind of thing can happen all the time. So, obviously a lot nowadays, you can send them off, and a lot of times you'll see some proposals, they'll only accept them by email. And so if you're doing that, you want to make sure that you get a return receipt on it, that kind of thing. So you have to watch all those things. You don't want to lose on a technicality like that. All right, things to keep in mind, especially if you're used to doing purely commercial work. There are going to be certain references to the federal acquisition regulations, cost accounting standards. If there's travel, when I talk about travel, we talk about coach, no first class, no business class. If you put in a first class ticket, what they're going to do is they're going to discount it to whatever that equivalent coach would be in terms of an audit type of standpoint. And things like entertainment, that all comes out, political donations, no. That's when we talk about this FAR 31205 select costs. There's like 47 different subdivisions of select costs, and they talk about each one, what's allowable, what's unallowable. Sometimes part of it's allowable up to a certain ceiling, things like that. And then the other thing you look at too is the payments and the cash flow, because, a big contract, which has a long lead time before you get paid, because you're a second or third tier sub, you want to make sure that you don't go broke before the cash starts coming in, because these contracts can really make you or break you, and that's a lot of times you have to look at, how much of your business base is going to be government work. All right, so we've got free and low cost assistance. Let me just, let's see, 30. Let me just back up, make sure I didn't skip one. Yep, hang on a minute. Okay. Thought I skipped by one. Okay, so finding opportunities and assistance. So at the federal level, you go to the System for Award Management, and that's sam.gov. And for most of you, if you're certified at the federal level, you're already registered with them and doing the annual certification updates, things like that. You've got the New York State Contract Reporter. Now, the only problem with that, if you're just starting out in government contracting, is I believe that only lists opportunities that are over $25,000. Erie County, you can go to their purchasing department website. You can look at that. Same thing, City of Buffalo posts their bids. That's the address for that. And then if you're just starting out and you're small, you may want to work with the Small Business Development Center, either over at Buff State or at Niagara County Community College. Not only because sometimes proposals, smaller ones, and certainly if you're filing for a certification, they may want a business plan, marketing plan, things like that. And the other thing is that if you're a client of the SBDC, that gives you access to their bid links website, which is, I don't think, available to the public, but that has listings at the state and federal level, and it has some of the other private ones, and it can have smaller level procurements in there as well. Then we talk about for your low cost assistance, again, depending on what your situation is, if you're an established contractor, you'll spend a few $1,000s and work with somebody. But, if you're still doing things, you're a solopreneur, a small outfit, and I mean, understandably, you're trying to do things on the cheap. Of course, you've got SCORE, you've got the SBDC at Buff State, the SBDC at Niagara County Community College, the Women's Business Center at Canisius has a number of programs. You've got something that's relatively new called the Buffalo Purchasing Initiative. And what their goal is they're trying to get awards for businesses of color. That's what they're focusing on right now. They're not worried about, you don't necessarily have to be certified, but if you're a business of color and it's set up, there's 14 different businesses that are tied in with it. So that includes Buff State, UB, Kaleida Health, Univera, Roswell Parks in there, Rich Products, Moog, Wegmans. So, I mean, there's some big hitters there for a variety of things, and that's just kind of starting out. So I've got the contact information for that. The SBA, the Buffalo District Office, they've got somebody there that I don't know how much help she is with, but she's kind of government procurement. So she may be able to help you with some of the certifications, that kind of thing. At the federal level, typically you use the Procurement Technical Assistance Center, and there's only about 4 of them in the state. The one that serves Erie and Niagara County is actually the Cattaraugus County PTAC. And so there's their contact information. If you're looking at formation, contracts, things like that, I mean, obviously you can contact me, but I mean, it's for pay services, or, my old alma mater there at the Small Business Legal Clinic that provides free legal services to entrepreneurs and small businesses. There's their contact information. All right, upcoming events. And I just bring this up. I talked to Sarah, who's the director over at the Women's Business Center at Canisius. I was talking to her Friday afternoon, told her what I was doing, and she has a Getting Certification 101 webinar on next week on the 23rd. And I actually signed up because I want to see who the contacts are, because they're actually going to have points of contact that are going to be presenting, I guess, from both the Joint Task Force for the City of Buffalo and Erie County, New York State, and I think whoever the in charge of the PTAC. So they're all going to be talking about certifications and things like that. So that probably is a good opportunity to maybe get some information that's free. And even though it's sponsored by the Women's Business Center, it's open to everybody. And then the Buffalo Purchasing Initiative, they're going to have a big matchmaker session for businesses of color. It's going to be at Rich Products. I talked to Mauricio about that. He's the new director of the BPI. He just moved into his office last week. So he's got this set up. He doesn't have a firm date on that yet. But again, you can go to the website and the information will get updated as time goes on. And then finally, that's just my information there. Oops, hang on a minute. My information there. If you want to contact me, probably easiest to get a hold of me by email. All right. So I see, let me go to the chat here. All
No,
right.
we're all set on
Okay.
questions in chat at this point, John.
Okay.
That's great information about the Women's Business Center at Canisius College, the February 23rd date, 9 to noon. I am going to have our people here at SCORE go ahead and send out a notice about that also.
Right.
So
And
thanks.
that's right on their homepage that you can register. There's a button you can click on to register online for that. In fact, I did that today because I'm going to sit in on it just so I can learn who the current points of contact are for all these organizations, see what kind of information they have and you know, what you can always learn something from it. Okay, so
Okay, there's a new question in the chat, John.
okay, let's see.
Do you want me to read it?
Is there a way to know if a prime contractor with a subcontract plan is lowballing a subcontractor? Well, what a prime contractor is gonna basically let out its own RFP. So for whatever products or services, so I mean, it's, if you're in a manufacturing environment, it's fairly easy. You could issue drawings and bill of material and we want a quote on this. And the contract's going to be for X amount. And of course, you know, part of the problem is that the prime contract may have 3 or 4 options over a certain period of time. So, you know, they can only subcontract as the awards come through. But they're going to look at, you know, they're not going to lowball anybody because the subcontractor is the one that's going to put the bid together. So then it's the same thing. If he gets multiple bids, he's got to look at, you know, ordinarily it's going to be the low cost, but now they call best value because there might be situations where the low cost maybe isn't capable of doing the job or they've had gotten questionable work in the past or something like that. So really, when you're looking at a subcontractor, they're going to get basically like an RFP or an RFQ from the prime. I hope that answers the question. Okay, so now I'm going to go, let's see if I don't.
Yeah, there's one other question in the chat. Does the SCORE office help review RFPs when they become available for clients? Not to my knowledge, does SCORE go ahead and review RFPs?
Okay. Now. Okay. All right, let me just get in my next slide up here. Oh, wait a minute. All right, so check for updates. Just bear with me. Let's see. Not worried about that. Okay. Okay, just bear with me for a second. I just need to. I'm doing this off the Mac rather than my Surface notebook, so I just have to get in here. We're going to do this 200%. Okay. So now let me go to.
John, there's another question. Is there a person or small business you can hire to go ahead and help with RFPs?
That's a good question. Is there probably are like proposal and grant writers. And that may be one of the things that, you know, you look at, you can get into like work with the SBDC and get into bid links. Sometimes they have in the databases the capabilities as well. All right. Can Ted, can you see the spreadsheet on the screen? Nope. Oh, Ted. Hang on.
Yes, John.
Oh, did I go dead or am I okay?
I can see your, I
Okay,
can see the spreadsheet.
okay, so I can go into the next area here. All right,
Yes.
thanks. All right. Things went silent, so I wasn't sure if I was just talking to myself. Okay, so one of the things that, it sounds like some of the questions, if you're first starting to develop things, how do we price our services? And I've seen, when I worked when I was managing attorney at the Small Business Legal Clinic, over the course of about 4 years, I worked with about 1,000 entrepreneurs and small businesses. And most of them really, they were clueless on a lot of this. And I mean, it's stuff that it comes with experience. So it's not anything against anybody's intelligence or that, but without the lack of experience, you wouldn't know. So what I've got here is a very simple example. So let's think of somebody that graduated with a degree in accounting and they decide they want to put up their shingle. So they're not going to have any employees. They don't have to worry about any inventory. They don't have to build a factory. There's no capital equipment. It's a very simple one-man shop. And it just kind of shows how you need to kind of look at things. So this person says, I get out there, I want to gross $25 an hour. So then we look at what's the equivalent billing rate. So you see, as I scroll down here, you start out, so that's going to be a salary of $52,000 a year based on $25 an hour, 40-hour week, 52 weeks. Then you start adding, what are my other costs? Disability, FICA, healthcare. I'm going to rent an office in one of these little incubators for $750 a month, about $100 a month for telephone. I'm probably going to need $2,000 for, computer and supplies, things like that. That could be a recurring cost. I might need certain specialized software subscriptions to different vendors. Figure throw $1,000 in there for continuing ed cost, $500 for website maintenance, $2,500 for marketing. That might also include developing a website, things like that, search engine optimization. So, I mean, those aren't outlandish numbers when you look at them. So now all of a sudden you look at that $52,000 for that $25 an hour now turns into $96,000 when you look at the cost. So now you look at, okay, so how do I determine my hourly rate? Well, you look at it and you say, okay, the available hours would be 40 hours a week times 52 weeks a year. So 2,080 hours, but you're not going to work. And I mean, obviously I know that if you get to work, you'd work longer weeks, you might work shorter weeks, whatever, but you kind of look at what's that standard baseline. And so then you look at, okay, what's going to happen? So you've got 2 weeks of vacation, 5 sick days, 10 holidays. Let's say you got 3 days a year for continuing education. And the same thing, you're trying to establish yourself in the community. You're doing webinars or, sessions a couple hours at a time. You're working with SCORE, the SPDC or something. So the equivalent of 3 days of community events. So that represents 248 hours. So now the total billable hours would be 1,832. So that represents 88% of that 2,080. So now all of a sudden, if you were busy every single one of those hours, so 100% utilization, then the hourly rate based on, $96,000 divided by 1,832 is going to be $52.47. And so you've got an overhead rate of 110%. So there you've got, the $25 and then 110% is the other $27.47 to get you to the total. So you can see right away that it more than doubles the cost. But then you look at realistically, you're especially starting out, you're not going to be busy 100% of the time. So let's say, and this could be very generous, even this assumption, you're busy 65% of the time. So 65% of the 2080 is 1,352 hours. So when you take that into the $96,000, now your rate is $71.09 an hour. So your overhead rate is 184%, or that's the equivalent of, 284% of $25. So you can see that it escalates quickly. And if you are in manufacturing and you have capital equipment and high utility cost, other things, you got to look at either insurances and things, other specialized equipment and other overheads that are involved. It's not unusual that you can have your wrap rate could be 4 or 5, could be considerably more if it's a very specialized business type of thing. And the reason I bring this up is because I've heard people say, well, I want to make, I heard a couple of people say, well, I want to make about $25 an hour, so I figure I'll charge 30 and I should be all set. Well, no, it doesn't work that way. And so all of a sudden, if you've taken that methodology and you've signed up for a multi-year contract, working part-time on a specific contract, and you're losing money on every billable hour, that can really be a problem pretty quick. Really takes off. So I just wanted to kind of give you an example of how you need to look at how you come up with billing rates on that. So I don't know if there's, okay. All right, so let me stop share, get this out of here, and now we're going to look at an RFP. Okay. Right. Where are we? Here we go. RFP. Okay. All right, Ted, can you see the RFP up on the screen?
No, John, I do not.
Okay, hang on a minute. Let me see. Oh, hang on a minute.
There it is.
Okay. All right, so let me just get this. Okay, so what I've got on here is I've got a RFP that came from the U.S. Department of Agriculture. And this one, it's a couple of years old, but it's kind of on point. So you can see that it's issued, if you look up at the top here, it was issued on 1/19/2021. And then, oops, hang on a minute, get back. Let's see. There we go. All right, and then the due date is 2/2/2021. So I mean, that's like a 2-week turnaround. So you have to, that's why I talk about, what can you do ahead of time? And then you see that it's got on here and I apologize because the bar is right over. Okay, so you see up here, it's listed as 100% set aside, small business. It's got the NAICS code. And then we talked about the size standards. I think that the screen I had in my presentation said 18 million. Now it shows for that particular NAICS code, the size standard is $19.5 million. You can see that the delivery or where the services are going to take place is in Lockport. And of course, it's administered by the USDA division that's in Minneapolis. So we come down here, oops. And you'll see that it says it's a solicitation for janitorial services at the facility in Lockport. Contract will be for 1 base year and 4 option years. Period of performance 2/15/2021 to 2/14/2026. And you see on this page, the first line item is for the base year. That's how, when they talk about line item, or they'll talk about CLIN, CLIN, that's for contract line item. Now, I just want to reference down here, it talks about solicitation, references, FAR provisions by reference. And then you'll see down here at the bottom, says signature of offeror, contractor, name and title, date signed. And then this over here would be where the contracting agency would fill that out later. And you see down at the very bottom there, it says standard form 1449. And the reason I bring that up is that'll come up here when I go through this a little bit farther. All right, so now we see on the second page, it's got the breakdown where it's got separate CLINs for each one of the options and the specific period of performance for each option. So again, if they ask for pricing by contract line item, they'll want to see a price in here by line item. All right, so now we talk about notes to quoter. So it says, in order to be considered for award of this contractor, the contractor must submit the following. And that's why I said SF 1449, that's that introductory 2 pages. So you'd have to sign and date the bottom of it as part of your proposal. And then it says price schedule with line item prices completed. Then of course, here it says confirmation of active SAM registration, because this is a federal requirement. They have key personnel. So a lot of times what happens is on government facilities, they want to know the contract employees that are coming in. So you actually have to have a list of those employees that could be working on the job. And so that's what they talk about, a list of key personnel. And then it says, okay, the work shall be done in accordance with the attached statement of work and in compliance with the applicable Department of Labor wage determinations for this work site. So we talked about that with the Standard Contract Act and the wage determinations, and you'll see that in a second here. So we talk about a technical capability statement. So it says technical capability must list equipment, supplies intended to be used, estimated time and effort to complete, how contractor will handle quality issues. So, obviously, if you're building something, that capabilities might be a little more comprehensive, but again, that's something that you could have in place. Then it talks about 3 past performance references with contract numbers with this agency or similar scope of work with other federal, state, local entities. And again, the question in the chat, what if, I'm starting up and I haven't done any of this work before? It just says if contractor has no previous work with federal, state, local, please state so in the submittal. Then we talk about here, it says, it is recommended that the interested contractor schedule a site visit to evaluate facility prior to quoting. And it says, see the statement of work for facility point of contact to schedule a site visit. Then it says here's kind of like the initial disqualifications. It says if a contractor's quote package doesn't contain all the items listed above or isn't received by the closing date and time listed below, quote may be considered incomplete for evaluation purposes and no further consideration given. And it says quotations that include additional terms may be excluded from consideration. So again, what are they asking for? Give them what they're asking for. Excuse me. Then finally, it says quotations must include a price for all items in the solicitation to be eligible for award. So we saw that there were 5 contract line items, 1 being for the base period, 2 through 5 being the 4 option years. Then we talk about evaluation of quotes. And so here's where they come back and they say, excuse me, award will be made on the quote determined to be the best value. And it says The comparative evaluation contractor quotes will consider the contractor's ability to meet the agency needs and the contractor's demonstrated ability to complete the work detailed in the statement of work. So it gives you an idea. Excuse me. Must be allergic to this set of slides.
And
Okay,
everybody will be receiving a copy of this, so just so everybody knows that it will come along with a PDF copy of the slide deck and a link to the recording of this session.
and the reason that I included this is I want you to see how some of these are broken out. So here we see the scope of work. It says the United States Department of Agriculture. It's got a contract for janitorial service. And according with the statement of work, building A is approximately 5,760 square feet. Building B is approximately 3,337 square foot. So it's got the period of performance, which we saw in the opening 2 pages, talks about the hours they're open. Here's the location. And then it talks about the point of contact for a site visit. Then it talks about the duties. So building A, which is the one at 5,760 square foot. Weekly, it tells you what you're doing in terms of emptying the trash, cleaning the bathrooms, cleaning the break room kitchen area, the main floors, the office areas, what you're doing. Then bi-weekly, it's going to be all the weekly duties plus clean all the floors that are accessible with a walk behind auto scrubber. Then we have monthly duties, what's there. Then we, so very detailed. So this, if you've provided janitorial services on a commercial basis, this gives you an idea, but you can see based on this description that you would probably want to see the building, have the site visit, because you don't know, is this restroom, is this like a bathroom with 1 stall, or is it a bathroom with a dozen stalls? You know, is the kitchen and break room area, is it got a table so 4 people seat, or is it an area that could seat 100 people, you know, kind of thing. The floors, what's the conditions of the floors, that kind of thing. And how many rug, you know, what's the square footage of rugs? How much glass needs to be cleaned? How many window ledges are there? That kind of thing. Because there could be a considerable variation in a building this size. And you get the opportunity where if you actually want to look at the facility, you know, the shape the floors are in that. Because I mean, all of those are conditions that could really affect how you assemble your bid, how much effort is involved type of thing. Then we talk, whoops, sorry about that. We talk about the same thing for building B, where it talks about here's the weekly requirements. And it says, okay, only during the active survey season. So it's going to be mothballed half of the year type of thing. Then we talk about selection of cleaning products. So it talks about, you know, what environmentally friendly products, and then it's got a website you can look at to access the bio-preferred program catalog to identify bio-based products. It talks about here that, you know, what the composition of disposable paper products and plastic bags and things like that. Then you'll see when we get down here, it talks about contract clauses that are incorporated by reference, contract clauses incorporated by full text. Then we scroll down and we look at some of these, and you see it's got hyperlinks in there. We talk about total small business set aside, small business concerns, in case you're then subcontracting some work to somebody else, it's a small business. Then we look at some of these, and okay, convict labor, what are they talking about here? Well, we can just go and look at the hyperlink. And let's see if I can.
John, we're running about an hour and a half at this
Okay.
point in our session.
Okay.
And do
I
you
can-
want to go ahead and allow me to open up the participant microphones so
Why
that
don't-
they can
why don't
ask
we-
questions?
Why don't you give me 5 minutes and I'll scroll through the rest of this? But like when you
Okay.
get this at home, you can double click on these, on the blue hyperlinks, and it'll actually pull up the one. So I mean, like convict labor, what that talks about is you can't have anybody that's currently serving time, but if they're out on parole, you know, that's okay, or they're on probation or whatever, or on a work program, something like that. But they talk about, you know, all these different things, Buy American Supplies. We talk about fair standard in the Service Contract Act. When we get down, we talk about, when they talk about option to extend services, what that allows them to do is multiple extensions up to 6 months. So ordinarily, when they would exercise that option would be, they haven't, that we get to the end of the fourth option year and they haven't let the new contract, I mean, maybe the contract's out for bid, but they haven't awarded the contract yet. So they can extend with the current provider of services for up to 6 additional months versus the next provision, sorry, I lost the option to extend the term of the contract. They talk about that would be, in this case, it says can exceed 5 years. So then what would happen is that's exercised in the option years and they could put another year in there. Then we talk about key personnel, evaluation. Talks about the site visit. It says no event shall failure to inspect the site constitute grounds for a claim under contract award. Well, I didn't know it was going to be this complex, so I'm putting more of an effort in than I proposed, type of thing. They don't care. I did see somewhere in there, I skipped by it, that you're responsible for the cleaning supplies, but that the facility is going to take care of supplying all the paper products and the trash bags. So you have to look at those kind of details. Then they get in here where they talk about the different small business representation certifications. Here we're talking about women-owned small business. Here was a small business, veteran-owned, service disabled, so on down the line. Then finally we get down here. We talk about the Service Contract Act. So let me just, so here we go. And here it is. So we get in here, it says Register of Wage Determinations under the Service Contract Act. So this at the time was the current revision for New York, for Erie and Niagara County. So when you scroll down here, you see a janitor, the base pay is going to be $13.12, window cleaner $14.15. And then it gets, after that, it talks about health and welfare, that there's additions to that rate, and then provisions with respect to holidays, vacation, that kind of stuff has to be factored in there as well. And that takes care of it. Okay, so that takes care of that. So why don't we open it up to any questions?
Okay, well, I will allow people to talk here. If anyone has a question they would like to go ahead. I'm in the process of opening up the, or allowing microphones to be open up here, just a moment. And it's going to take me just a couple more minutes here.
Got to do it one.
If you have,
yeah.
If you have a question, would like to raise your hand and open your microphone, go ahead and do that. Almost finished here, allowing microphones to be open.
Okay.
Okay, almost done. Just a couple more. Anybody with a question that you want to go ahead, open up your mic and talk directly to our presenter.
I think I put them all asleep, Ted.
I don't think so, John. That's a lot of good information there.
Oh,
Anybody want to talk about the
all right,
Kansas
I've
City
got one.
victory
I
yesterday?
see Kevin Brown.
Yeah, that's me. Hey, how's it going, John?
Good.
Information's been very informative. I've been learning a lot tonight. I had a question about the Excel spreadsheet you showed with the billing rates.
Sure.
Is that something I could look up? Like, how do I go about getting that? Because it's very like informative. Just looking at it, I'm like, okay, I have a good idea now of.
That should be one of the things that Ted's going to send out.
Okay,
Yes, it is.
awesome.
So you're
Thank
going
you.
to see that you're going to get a copy of the PowerPoint deck, that spreadsheet, and also a copy of the RFP with the highlights in it. And
All
now
right, awesome.
the one that you get electronically, if you're scrolling through the RFP and you see the FAR provisions with the hyperlink, you can just double click on the number, and that'll actually pull up the federal acquisition, the regulation itself.
Okay, awesome. Thanks.
Okay, Kendall.
Kendall?
Yes, first let me say, definitely, this was a lot of good information. It was a lot of information, but it was a lot of good information. And I think that's probably where the silence is. I know for myself, I'm kind of still trying to absorb it and trying to,
Sure.
make sense of it all. But you mentioned earlier, you said you used to, at the organization, used to manage that. You work with a lot of entrepreneurs who are kind of clueless over this in this arena, and I think that's what I am right now. It's kind of clueless. I've been doing the work for 20 years,
Right.
but so you give me a truck and some tools and I can I can perform the work. You give me a crew and I can manage the crew, but this part of it is kind of foreign to a lot of us.
Sure.
Even the idea of just bidding. Now, I saw some examples of bid sheets and RFPs and such. And I can tell you, I've been a project manager for Walmart for 8 years, and I really can't understand that side of it. Right? You know what I mean?
Right.
So one, thank you for the information you've given us. Is there a way for us to kind of dwindle it down to kind of, instead of taking it from a fire hose, to kind of get it from a.
Sure. Well, where are you in your entrepreneurial journey?
I am about a year, operational, about a year in.
Okay.
And it all kind of happened weirdly. So I don't think that my steps, were good.
All right. Well, what I would do, have you worked with the Small Business Development Center over at Buff State?
I have, when I was initially starting putting a business plan together.
Okay.
I went there for that. Kind of I didn't really get a lot out of that. I kind of just and again, I kind of fell into this role right now. So I was a project manager for Walmart for a long time. That's a lot of traveling. I wanted to stay home, so I opened up a company here for someone else.
Mhm.
And basically it was using my project management skills, put together a team, organize the building, get the business in order that way. And then when that was over, I decided, randomly a couple of other companies, manufacturers reached out and said, hey, we wanted to expand to that area. Can you kind of do the same thing?
Sure.
And so rather than do that, though, I decided to take, a couple of suppliers and use them to start a business, right? But like every step was not necessarily on purpose. So therefore, I didn't necessarily plan this out the way I kind of should have.
Sure.
And so that leads me to where I am, which is not bad, in a bad place, but organizationally,
Go to the next level.
I need to put
All right.
things in order.
So, okay, so let's talk about, for example, and it's maybe worthwhile for other people listening in. So right now, do you have some employees or?
I do. Over the last year and a half, I have one who is full-time and with me
Okay,
regularly. I have 8 that are like seasonally. I used them through the summer last year.
sure,
I laid them off in December. I'm gonna be looking to pick some of those guys back up, in about a
Okay.
month or so.
right, right,
Um, and then there are support, right? So I really don't have a support team that as far as bookkeeping, accounting,
right.
legal, you know, and that, which is something that I'm looking to try and figure out now, how to put that team together to get me in a place where I can move to the next level.
Now, organizationally, how are you structured?
As an S corp,
Okay,
now even that, right? So I put an S corp together, but originally it was for a different business and a different field, but I wound up not doing that because COVID started.
sure,
I had the incorporation set up and papers and all done.
right,
And so I just took it and used it for this. Now
Sure.
it's 2 different categories, obviously. And I didn't even start that other business. So the name doesn't fit the
okay,
industry.
okay, because what you can do is you can actually file a name change.
Okay.
So you can,
And that was a question I was gonna have. Would it be better to file a name change or start over?
well, the thing with the name change is that it's just a name change, so the business, you've already conducted some business.
Mhm.
So when you're looking at experience, that's a lot easier to apply than closing and starting a brand new business.
Mhm.
I mean, there's really no reason. So yours is a corporation and then you've got subchapter S tax status.
No, it's filed as an S corp.
Okay, but I mean, it's filed as a
Oh.
corporation as opposed to an LLC.
Right, correct. I'm sorry. Yes.
Because you can also file LLCs as subchapter S, because S corp is just a tax election.
Mhm.
It's either corporation or limited liability company typically. And
Mhm.
you could be either or. And I mean, for most small businesses, I mean, it's an LLC simpler, but I mean, the S corp, I mean, it gives you what you want.
Okay.
It's really, it's 6 of one, half dozen of the other.
Gotcha.
Hey, John.
Yeah.
Hey, John, can our attendees go ahead and give you a call on extended questions like this one? I know we have one more
Yeah.
hand up. VJ has his hand up here for a question.
Okay, so Kendall, I would just either talk to somebody at the SBDC or at like contracts and things like that. You can contact the Small Business Legal Clinic, and the contact information for both of them is in the PowerPoint deck.
Okay. Thank you.
All right.
VJ.
Hey there. I do have a follow-up question. Thank you so much for your presentation here and the information.
Sure.
The follow-up question is regarding the prime contractors, and it was really with when a prime contractor wins the bid, say on sam.gov or whatnot, but they in the submission for that bid, they say, well, or even the bid requires that they have a subcontractor goal or plan. And so they kind of say, well, we're going to allocate, say, 30% to small business concerns.
Right,
And in that, they have to make a good faith effort to
Right.
fulfill that. If they kind of skirt the issue and, not really make that good faith effort, just so that they can retain most of the award. That my concern is like, how do you not get taken advantage of as a subcontractor? trying to work with that prime contractor.
Okay, well, one of the things that has changed over the years, when they first started putting these goals in 20 years ago, it was really kind of a goal and you would go through the motions and try and find subcontractors in that, but there wasn't really any penalty. Now, when you look at prime contractors, their report card is always graded on schedule, technical, and financial performance. But now a fourth metric is making your subcontract goals. So that is actually on the contractor's report card. So one of the issues that I had why I initially kind of got over onto this side, I joined SCORE in late 2015 when I was still working for a prime government contractor, because one of the problems we were finding was trying to find subcontractors. So it's kind of part of the problem is that trying to find subs is not as easy as you think. How do
Okay.
you, because I mean, you look at, you're trying to find subcontractors, they got to be able to do the work too. Because
Right.
the problem with hiring an unknown subcontractor is that if you don't work out, we've got to replace you with another certified subcontractor, and we also have to eat the cost. Because it's typically going to be under a fixed price contract. And if we hire a subcontractor and they screw up, that's not the government's problem, that's our problem. And so now we're
Got it.
paying twice the subcontract cost, or we could be essentially to get that effort done. So, it's all, how do we find these? One of the things, that we look at is some of these databases. And of course, like we look at the other side that you could get involved with, like the SBDC and bid links. And obviously, if you're looking at the New York State Contract Reporter, are you a certified small business?
Not yet. My application is still pending
Who
with
did you?
SBA.
Okay,
With
so
SB. Mhm.
so federal or New
Yes,
York State. Okay, so through SAM.
through SAM, with SBA. So doing WASB, actually Ed WASB.
Okay, so now what kind of products or services?
Well, this will be consulting and mostly with accounting and finance. And so I'm actually an unofficial subcontractor with a really large consulting firm, and I just found
Okay,
out that their contract with the government. And so
see now the problem that they have is because you're not certified at this point in time, they don't get any credit for using you.
yeah,
That's the other problem.
right. But I'm hoping that by the time, right now they're preparing to do a recompete. And so by the time this ends in October, I'm hoping, my certification will have been approved, and I'm trying to figure out the best way to approach them to
Well,
say, hey,
yeah, I mean, SAM shouldn't take that long. Because a lot of that's almost a self-certification. The
oh, no,
problem,
no, with SAM, you have to, SAM, I'm registered in SAM already, but for SBA, as a small business, to be certified as a small business, that's taking a bit of time because that's not self-certified anymore.
okay, so that's changed, but it shouldn't take that long. New York State is a problem. They're running about 2 years now. So the way you can kind of circumvent that is Erie County and the city of Buffalo have a fast track program where you can get for MWBE, where you can get certified, and that usually within a couple of months. And so
Okay.
that is tied in with New York State. So
Mhm.
that would help you at the regional level. And
Got it.
that is good for like contractors. I mean, they do a lot in construction. They really gear the application, and that usually goes through in a couple months because they have people review it, and then it just goes through like the Erie County Industrial Development Agency and the Common Council, and that's how they get the approval. And so then, even though you might not be a certified MWBE with New York State for regional contracts in Buffalo and Erie County, you have that same kind of status. And so
Got it.
that's why I'm pushing that webinar that I found out about Friday that the Women's Business Center is giving, because what they're going to do as part of the webinar, they have actually representatives probably from PTAC, the Joint Task Force, and from New York. So I don't know if that's going to be Empire State Development. So they might be able to answer some of these questions.
Got it. Thank you so much.
Okay.
Very good. Thank you.
Okay.
Okay, we don't have anybody else's hand up. So, and we are approaching the 2-hour time for this webinar. So John, you did have on your last slide, you did have your contact information.
Probably easiest to shoot me an email. My email address is on there.
So I want to thank everybody for being here for tonight's webinar, and thank you especially, John. Again, lots of information and very much appreciated by everyone involved. And certainly for that information on the Women's Business Center and their webinar that's occurring next, is it next week?
Hang on a minute, I'll tell you. Yeah, it's going to be next Thursday, the 23rd, from 9 a.m. until noon.
Okay, and attendees can go ahead and register for that by going to the Women's Business Center, their website, Women's Business Center at Canisius College. If you Google on that, I'm sure you'll be able to
And
access their website.
Yep, and the contact for the Women's Business Center is right in my PowerPoint deck as well. So you can go
Okay.
right to that link, and the home screen that scrolls, it's got coming across that. You can click a registration button for that webinar.
Terrific. Thanks again, John. Thank you for everybody joining us tonight. Wish you all a good evening and stay healthy. Thanks for being with us.
Have a great night.